And joining me now for a look at what's been driving local markets today is Nicholas Sorour. He's a portfolio manager at Sasfin Securities. Nicholas, thanks so much for joining us today. Markets positive at large. Have you been able to take note of anything else but the slew of earnings reports that have hit us today?
I managed to have a look at the market for a couple of minutes today, but lots of results out. Very, very busy day, very interesting. Markets were up. I mean, we saw gold stocks rebound quite firmly today. Even though the gold price was down, the rand weakened quite heavily. We're firmly above 9 to the dollar, so that's helped lift up some very weak gold shares over the last couple of weeks, so that really pushed the markets. Your big dual-listed companies like South African breweries and Naspers and Richemont and British American Tobacco, which form big parts of our industrial index, also helped lift the market up on the back of a weaker rand as well. So generally speaking, market back up to a little bit below 41,000 points again, which is amazing because we were down to below 40 for quite some time last week. So very volatile.
Supported more so by the resources sector today, where we did see a pullback was in the financial space. So what are you making of that kind of activity? Is it just a matter of traders saying we need to take something off the table and direct it somewhere
Goodness,
else?
it's a day-to-day theory. You know, there's always a story of why did the financials go down today and the industrials up. I don't think there's a specific story within there, but certainly we've seen some very positive movement on a lot of the financial stocks. We've seen Standard Bank touch 120 again, which it hasn't done for many, many years now. We've seen Nedbank recover a lot in first round, maybe a little bit of profit taking. Resource stocks are still massively under pressure compared to where they were before the market crash. We need to understand that. So I guess maybe some bargain hunting today on a weaker rand.
Well, Sorour today displaying exactly why those resource stocks have been under pressure. I mean, those results, the market seemed to be pretty disappointed with them overall. And added to that, we've heard them announce the fact that we're looking at coal strikes risking South Africa's power supply as well moving forward.
That's a very interesting point. Yeah, I mean, strikes in the mining sector have certainly been on everyone's talking points lately. You've had strikes across the board, not just coal, platinum and so on. I think we need to understand Sorour's results are based on the very weak iron ore market that we saw in the previous 6 months. Just to refresh everyone's memory, 60% of Sorour's earnings come from the indirect holding within Kumba via the Cision holding that they have. So that really fed through to these results. On the back of that, you've got the double whammy of a reduction in the coal price over that period as well. Their average coal price in the previous 6 months, I think, was $118. This past 6 months been about $86. So there's a massive reduction there. Tronox, which is this mineral sands division that they've managed to invest in heavily, which is an offshore listed business, that also had a pretty terrible previous 6 months as well. So they were battered on all sides. So earnings down 30%, not a pretty picture at all. Little bit lower than most analysts' expectations, but understandable compared to where they were in the previous 6 months. But that's old news. We need to look at what's happening now. Iron ore prices have rebounded, coal prices have rebounded. There isn't massive strike action at the moment at any of Sorour's mines. So Sorour should be pumping currently. I think the biggest constraint is, of course, the railways. Can they get all that stuff to the coast and export it? Can they get it all to Eskom's power stations?
And at what cost as well when it comes to exporting? Because we've got government on a hefty initiative right now looking to
strategic resource.
Exactly,
yes, yeah,
and to beneficiate locally.
It doesn't really affect them too much. We need to understand 80% of Sorour's coal at the moment that gets dug out of the ground goes to Eskom. They've got these massive contracts with Eskom to supply Eskom's power stations with coal. I mean, specifically the two new ones, Medupi and Kusile. Even though they are far from completion, unfortunately, stockpiles have to be created to fuel these power stations, and that's an ongoing process at the moment. So yes, price is down, but my humble opinion is it's an opportunity rather than a complete disaster. And I think if we see continued weakness, if you can get the stock, in my opinion, closer to 160, I would personally be buying for my clients.
From those companies that have released results today, what's stood out for you as impressive?
Oh, there were plenty. Hey, Spur was pretty impressive. It's amazing how that company keeps on pumping out for some fantastic results. Very, very decent numbers. I think a 40% increase in revenue, very decent profit, nice little dividend. Share price has gone absolutely crazy through the roof, above 26 Rand a share, but just very good set of numbers. And we've seen that from famous brands as well, that space, that not fast food, but convenience food, the whole idea of getting involved in that space has really been profitable for investors. So nice set of numbers picked up on that. Aspen as well, we had a trading update a couple of weeks ago. Results were out today, also spectacular.
Because it's a 17% increase in half-year profit off an already high base.
Well, that's my point. It's not just a small business starting up. I mean, we're talking 17% in a tough world economic environment. It's not easy out there, so it's pretty impressive. It's also interesting to see that I think full year next year, you're probably going to see profits outside South Africa actually be higher than what they have originally, or what they were in South Africa. So South African business actually getting more revenue and more profit outside South Africa for the first time is nice to see on us.